What will happen to property prices in 2025? In this video, I'm going to take on SQM Research, Louis Christopher head to head and check out his forecasts and give you my thoughts on what I think he's got right and wrong and come up with my own predictions for what's going to happen in property in 2025. Let's go. So first up, we have Perth, and Perth is flying. And yes, I think he's right. It will produce the best results in 2025, at least to begin the year, because he's got property prices rising plus 14 to plus 19% if there's 1 or 2 rate cuts by the middle of the year. If there's more rate cuts, or if they happen a little bit earlier, he's got it increasing by 20%. Again, Perth is about to do 2024 one more time. Man, if you've invested in Perth, you must be reading this being like, hallelujah, I'm gonna make a fortune again. I think you might be right about that because when you go through the detail, it makes a lot of sense. So this is what you've got here. He's got a few reasons. The WA coffers have a $2.6 billion surplus. It's doing really, really well. There's a huge infrastructure pipeline that's going in that's going to support jobs. You also have dwelling commencements being really, really low. They're currently building at half the rate as they did in 2015. Yet population growth rates are really, really high. So you have a big undersupply right now in WA, and it's not going to get much better. Now, recent data has new listings shooting up in WA and has approvals going up too, but it's going to take a little bit of time for this to balance out the market. And of course, listings are going to go up. If you lived in WA and you invested there for a 10-year period, you would have been like, I made no money. And now you can sell your home at nearly double the price at what you would have got just a few years ago. What that promotes is more sellers. That's exactly the demand and supply curve happening. As the price goes up, more people want to sell that. That's just normal behavior. But you've got really, really strong fundamentals there as well. These are the stats that he's got here. With the current population growth rate at 3%, the population is going to expand by 90,000 people next year, but there's only going to be 16,800 dwellings in 2025. Those numbers just don't match up. 5 people don't live in a home. Only about 2.5 people do. So technically, they're building enough homes for about 40,000 people, 45,000 people, maybe 50,000 at stretch. But they're going to bring in nearly double that amount. So the housing shortage in WA is going to be even stronger in 2025. And that's going to mean the demand-supply imbalance that is already so strong is going to continue. And that's why he's got prices rising at nearly 20%. And I think he's pretty spot on about this. Perth will do really, really well. Not so sure it'll go that strong, but I do think it will do pretty close to that, at least to begin the year for the first 6 months, where it is a little bit more predictable. He's also raised the main issue for WA. He's like, these are his words. The issue in all of this is that iron ore prices, if they suddenly plunge, then the WA economy and its housing market, for that matter, could turn on a dime. Could turn on a dime is the words that he used. That's a bit scary from one of the smartest housing experts in the country, saying that house prices in one area could turn from one single metric, the price of a commodity. And with changes in the geopolitical environment, with what's going on with China and with the Trump presidency coming in, there's more uncertainty with what's going to happen with iron ore prices. I actually think that it could do pretty well. I think that if there are tariffs, China might be like, holy crap, I need to stimulate other sectors of the economy and start pumping more money into a very, very weak housing market there. And that could promote demand for our steel, which could then improve iron ore prices again by adding in a huge, huge buyer, or already a huge, huge buyer is going to buy more of what we need. So it could actually go well, or it could turn on a dime, as Louis Christopher says. Okay, the next market we're going to go through is Brisbane, plus 9 to plus 14% here. Now, I should contextualize this. For these sort of analysis markets, whenever you come up with any prediction, you need to put forecasts in there. He's used baseline forecasts. Population growth rates around 500,000, no new inflationary outbreak, and 2 rate cuts in and around mid-2025. That's kind of what everyone's predicted. And when we have a base year where things go as planned, much like 2024, there wasn't too many surprises in 2024. Interest rates stayed the same, inflation didn't get out of hand, nothing went out of control. Very, very predictable, benign sort of year. If you have that again in 2025, it becomes a little bit easier to predict. And that's what we're basing it off. If you change the assumptions around and you say a meteor strikes Perth and, there's lots of shark attacks, and everyone doesn't want to go live there, or something crazy like that, then the assumptions could change. So the results are really a function of the assumptions that you put in. So he's used baseline assumptions, and I'm pretty happy with his assumptions. I think that's the right thing to do, and those assumptions are all pretty spot on as of right now in late 2024. That's kind of the best predictor that we have here. So Brisbane house prices +9 to +14%. Wow, these numbers are really, really big. Really, really strong. They're so large that I'm scratching my head here for a reason. I think he may have overcooked this. He's got his reasons, and I can understand them. So why do I think he's overcooked it? +10 to 14%. That's what he's got here, 14%. I'm just doing the math. So he's got rental price growth in Brisbane at next to nil. House prices up 14%. Yields are already 3.6%. The yield in Brisbane is the lowest on record. If you increase house prices nearly 15%, rents don't go up, the lowest yield on record then gets worse and worse and worse. I think the affordability constraints in Brisbane will start seeping through into the marketplace. Now, the economy is doing really strong, but they are completing enough homes. They're actually building enough homes for the population growth at the moment. They've got balanced population and balanced build. So they're going to complete 30,000 homes in 2025, and their population growth rate's around 80 to 100,000 if all goes to plan. So this one's really, really interesting. I think he's overcooked it. I do think the economy is doing really well. I think house prices in Brisbane will remain stable, will remain strong. House prices will grow, but I think it will be in single digits. I think it'll post a good year, but it'll be somewhere around that 5 to 7.5% range. I could be wrong on that. He's got far better data than me, and he's suggesting that it's much stronger than that. I just think that in the latter half of 2025, people are going to realize, hang on, man, this is really, really expensive. So do I really want to buy here? And it might take more than one rate cut or even 2 rate cuts to fix this. So if you have 4 rate cuts, then I do think Brisbane's going to go on a tear. But with 1 or 2 rate cuts, I just think the numbers are just too ugly for house prices to rise by this much. Okay, next up we have Darwin. Oh wow, he's got a pretty strong forecast here. He's been wrong on Darwin a few times because I've read his reports over the last number of years, and I'm like, maybe I should invest in Darwin because the capital growth rate predictions are pretty high. And it's pretty high again, +5 to +8%. This will be Darwin's best year in 10 years or so. That's what he's predicting. I think he's wrong again. Can you believe it? I think he's wrong, but he's undercooking it this time. I think Darwin house prices are going to blow these numbers apart. I think it's going to be the surprise state of 2025. I think all the buyers agents, all the investors, and there's a lot of them, which we covered in the 2024 themes, where investors are everywhere. They're like ants crawling around being like everyone, and there's a piece of old fruit there, and there's ants coming in from every single direction now in Brisbane, in Melbourne, in Sydney. We got it everywhere. That's investors right now. We are like ants being like, I really want a piece. I really want a piece of this. That's happening. And guess what? By process of elimination, by a function of yields, and by a function of what they invest in, I suspect Darwin is going to be a little bit more exciting, and he's underestimating the follow each other mindset, the herd mindset that exists in the property world, that exists in investor world, and the marginal buyer, how Darwin is a transient economy, how it is an investor-led economy. It is an investor-led housing market. Now, if the investors come flying in, then house prices could rise a lot, and because of its price level, it could rise significantly more than this. I think he's undercooked it by at least half. I actually think Darwin house prices will rise double digits next year. That one is a little bit of a brave call because I think everyone would say the opposite, and I think Louis Christopher is being brave by saying +5 to plus 8%, but I think he's still undercooked that. And I've said my reasons why. It's the investor effect. He said these words, though, that are particularly interesting. So, Northern Territory's outlook on the economic front looks quite good for next year, notwithstanding risks of a nationwide recession and any slump to global commodity prices. So the NT economy is looking pretty good. Its unemployment rate, 4.2%, very, very low for its standard level. It's got some good economic activity there at the moment that could help drive more people there as well, and maybe get some more overseas migration too. Who knows about that? Next up, we have Melbourne, down 5% to down 1%. So Melbourne pretty much posting a repeat of 2024. House prices to go backwards in Melbourne again. I think he's right about this, actually. I think Melbourne house prices will fall, and I don't think an interest rate cut will save it. You might be watching this being like, hey, Redham, didn't you just put a podcast out saying that your top area to invest after 100 hours of research is Melbourne? Yeah, I did. Yeah, just because house prices are going to fall in 2025, that doesn't mean you shouldn't invest there. It's like pre-positioning yourself. I said it in that podcast. It's about buying there when nobody is looking and thinking not about 2025. It's about buying there in 2025 when no one's looking and being like, what's going to happen in 2027? You don't really care about the growth rate in 2025. In fact, you want it to be low. You want it to be really bad. You want to be like, no one's buying here. Hallelujah, I can go pick up what I want and, throw some punches and lowball and get myself a great deal right at the right time before the next market cycle. He's got a number of reasons here. Melbourne market currently has a surplus of properties. There are too many homes in Melbourne, apparently. Wow, I didn't know that one. There are more homes for sale than there are serious buyers. Yeah, that's very, very true, because a lot of people want to sell their home. The situation has deteriorated over the course of 2024. Yes, we've picked that up in our summary of 2024. Before the predictions video, we did a summary of what happened in 2024. So if you're interested in that, check out that video, because that will give you everything that happened in 2024 and lay out the context for this predictions video in 2025. And if you're still watching, could you do me a quick favor? Hit that subscribe button and keep producing content like this. Next up, we have Sydney, where I'm producing this video from, where I've lived and grown up and raised my whole life. My favorite city in the whole wide world. It's gonna do poorly. It's kind of sucking right now. House prices are falling. House prices will keep falling. House prices are gonna fall at a faster rate. It's gonna be a little bit poor. Poor. That's the word I'm gonna go for. I was gonna use a swear word, but I have a swear jar at home and I shouldn't use those words anymore, so it's gonna suck, okay? That is pretty much the story, and an interest rate cut isn't gonna save us, Sydney. I'm sorry to say that, but one interest rate cut isn't going to save us. It's going to be like, hallelujah, interest rates are coming down. One rate cut, sorry, that changes your repayment by like $20. It's going to help you buy a coffee. It's not going to actually change everything for you. So house price is going to go backwards. I think this might spread around Sydney. It's like a little bit of a disease happening. It started in the eastern suburbs. It's gone up to the inner north. It's in the CBD area. I think it's going to start spreading around, and it's going to be a little bit of a nasty year for Sydney-siders in terms of the housing market. On the upside, when Sydney house prices fall, I've picked this up a few times, every single time, and it's fallen for the 4th time in 6 years. This has been that's Sydney house prices. Anyone that says Sydney house prices is stable is living under a rock. They just haven't paid any attention. They're just probably some old person that's like, house prices always go up. Yeah, because they don't pay attention every year. They're not paying attention, making videos every week about it. So when you do pay attention, you know it's been like this. It's fallen 4 times in 6 years, since 2018. 2018, we had the Royal Commission, house prices fell by its most, 15%. Then we had COVID, a very, very small blip. You can probably ignore that one. That was all across the country. Then we had 2022, another 10% decline, a really, really rough time, a very scary time for Sydney-siders. I was a little bit afraid then as well, being like, yikes, how on earth are Sydney-siders can afford this repayment? Is there going to be an employment issue? And now we're entering the 2024 housing correction. Be like, what? Wasn't it just 2 years ago we had our last one? Wasn't it 2 years before that we had our last one? And 2 years before that we had our last one. Every 2 years, Sydney goes through a housing cycle right now. And that's a story that you can say over an 8-year period or over a 6-year period now, where we've had big yo-yos in house prices. Now, Louis Christopher breaks it down with total listings, and he says that the regional breakup shows listings rising in all Sydney regions. That means more people are selling their homes in Sydney. but it is more acute in Sydney CBD, the Upper North Shore, and the eastern suburbs. And yes, that is very true. I've sold a home in the eastern suburbs in the last 6 months or so, and yes, it was very, very weak. It was pretty hard to sell. Definitely not the Melbourne story, definitely not the Perth story that we've heard from so many of our property investors. By the way, if you need help with your finances or any property strategies, we run one of Australia's fastest growing, one of Australia's best mortgage broking companies, and we're more than happy to help you at Confidence Finance. There's a link below if you want some help with your finances too. Anyway, Louis Christopher also says these words: the Sydney housing market is ripe for a correction. Ooh, this one's a bit of a blow to the guts right here. It hurts hearing. Is ripe for a correction. Yikes, that's going to hurt my hip pocket because I own a little bit of land and a little bit of property in Sydney. The leading indicators tell us that this is already happening, and our fair valuation models tell us that it should be happening. So yes, I think he's right. Sydney house prices will fall between -5% to -1%. I think it might be on the -8% to -5%. That hurts saying out loud. I think he's undercooked how bad it could be in Sydney. I think it's going to get pretty aggressive in Q1 next year. That house prices could fall a little bit more, or the data's going to play out that house prices are falling. So it could get even worse than it is right now. That doesn't mean it's not a good time to buy in Sydney. Again, if you're an owner-occupier and you want to buy in the marketplace, these sort of buying conditions are pretty good. And rate cuts will save Sydney. And also, Sydney house prices falling may bring on more rate cuts. As crazy as that sounds, it does drive behavior. If Sydneysiders stop spending, if Sydneysiders feel afraid, if Sydneysiders are worried, that drives national GDP so much. That's how powerful it is as a function of our total country. Sydney is the economic engine room and Melbourne is the economic engine room. These two combined have the similar housing stories. It's going to weigh on the economy even more in 2025, and that could trigger interest rate cuts. So the same story that you've heard time and time again: property investors, homeowners, house prices fall, and then the government comes in and bails them out with interest rate cuts. That, I think, will be the story of 2025. I think we're going to repeat history once again there. Adelaide, he's got +8 to +13%. Ooh, this one's really, really interesting. This one's really interesting because it's investors driving the demand in Adelaide. I think he's overestimated it a little bit. I think in the first 6 months, Adelaide will shoot the lights out. I think it'll do really, really well. But I'm a little bit afraid of Adelaide because I think if the economy continues to deteriorate as it has been over the past few months, and if employment growth continues to weaken, I think investors will start selling out. I think there's a new investor out there. I think I'm talking to some people right now, looking at this camera, I'm looking at you right now. I think there's some of you out there that are looking at your property portfolios and thinking, you know what? I really like investing in property. I've got some skills. I've made a lot of money. Might be time to sell. I think you are going to see a surprise in Adelaide. You're going to see a surprise with investors deciding it's time to exit. It's time to leave. It's time to sell up. I think Adelaide is going to see an exit of investors. That creates new listings, new pressure, and that won't be soaked up properly. And I do see Adelaide having a yo-yo next year. And I think Adelaide will change a lot in 2026 and 2027 as well. I think Adelaide has been a stable, consistent performer. I don't think it will. I think it will have a period of decline as well at some point in the future. So I would not be investing in Adelaide. I think he's right about the +8 to 13% in H1. But I don't think interest rate cuts are going to save it. I think interest rate cuts are actually going to promote investors to be like, I want to get out of here. I want to buy somewhere else. I'm going to go like this. I want to buy in Melbourne. That's what's going to happen sometime in 2025. Could be wrong about that, but you know, I'm doing a YouTube channel. It'd be boring if I just say, hey, this is going to happen. This is just going to happen. Everything's the same. It's way more interesting making some calls and, you know, putting my crystal ball hat on, and that's what this video is. Let's not hide from it. It is a crystal ball video. It is predictions for 2025. I'm reasoning out the predictions and reading the winds a little bit, and I'm doing it based off all the conversations that we have. We represent hundreds of investors at Confidence Finance. months. We have done over 250 deals in the last 4 months alone and seen property transaction after property transaction, property investor after property investor, had so many phone calls and conversations. So I'm piecing all of that information together and sharing that with you when providing these insights. It's not just a standard story coming out of nowhere. It's talking to property investors. It's talking to real estate agents. It's getting a sense, getting a lens of what is happening in the finance world with deal making and sharing that with you to come up with these insights. So it's not coming out of nowhere, but it is just one person's opinion who could be completely wrong. I'm just one YouTuber sharing my ideas with you, so take it with a grain of salt. Listen to other people as well when forming your own views. Okay, next up we have Hobart, -3 to +2%. Yes, Hobart with a plus sign. I know there's a negative bit there, but there's a plus sign. You know, that's something positive. I don't think there's that much interesting to talk about Hobart. Won't do all that much, so you can probably expect just another year of nothing. Pretty much, I think he's kind of right about that. Canberra, yikes, -6 to -2%. This one's really interesting. I won't delve into politics, but right now, there is the potential change of a government change in the first term, which you wouldn't really expect. I don't think that's ever happened in my 30 or 40 years, 35 years of being alive. I don't know if that's ever happened in Australia. It would be quite rare. But the reason why I bring it up is we have a situation where Canberra could be really impacted with a change in government, because I suspect if I am a Liberal Party person, policy person, I'd be sitting there being like, why is the government hiring all these people? Why is the government spending all this money? Why is the government adding in all these policy-making people? That adds billions of dollars in expenditures, and do we really need it? Can we be more efficient? Can we be more productive? These are the questions that will circle through a new government's mind. They do it every single time they come in power, but I think it will be even more pertinent right now. If you've ever heard the word Doge and seen US politics, you'll know a little bit about this. This could become a bit of a rising theme, and I saw a debate between the housing minister at the moment and incoming potential Liberal politician, and she pretty much said it, where the housing minister said, we've added 35,000 new employees, we're so good, and the housing minister, the shadow person, the Liberal person, just went be like, are you crazy? What a dumb metric for success. You've just added in 35,000 people and you're saying that's a good thing? That's spending more money. That's our money that you're spending to hire on public servants, and you see that in the data absolutely everywhere. So Canberrans, a very, very stable market general, but it's full of public servants, and I suspect if there is a government change in around April, May next year, then Canberra could get worse than this. It could have a really, really bad year, because I think it's going to be a slash and burn approach to Canberra, and Canberra's going to feel the heat there if that does happen. So Canberra is very much a question mark around its political environment, which is always the case, but it's typically more volatile during election years or the 1 year after an election, and next year is an election year. And right now it's a bit of a toss of a coin. I don't know what the betting markets are, but you wouldn't have expected it to be a toss of a coin, but right now that's what the market suggests it is. So it's really going to depend on who stays in power next year. Very, very odd conversation to have when I'm talking about property prices, but when you talk about Canberra, that becomes the topic point to talk about, because that's what really drives house prices there. So there you have it. My predictions for 2025, my reasons why, and some of the themes for actually what's going to happen to property prices in the year ahead. If you enjoyed this video, do me a big favor, hit that subscribe button, and I'll keep producing more and more content like this. And I'll give it to you straight. I'll tell you what I think. I will encapsulate what all the other property investors are doing and sharing it with you. And we have some super, super exciting content coming up with the suburbs that people are buying in, where they are, why, and unpacking all of that stuff that I get from all the other property investors out there and sharing that with you. That's what this channel's about, and I hope to produce more content for you all.